How's it going, everybody? Today I'm going to be teaching you guys this stupid simple strategy that's made me over $30,000 just this week trading the NASDAQ. So a couple of things I'm going to run down for this video. One of them is going to be the trade examples that I took this week. Another one is going to be breaking down the trade that I took today using this exact same entry model and then giving you guys all the ins and outs of everything that you need to know about the strategy. So I built this entire presentation for you guys just so I can be able to show you guys exactly what it is about this model that makes it so easy and so simple to understand and be able to actually execute and see profit from the markets with this. So we get into the examples of the trades that I took this week. The one on the right is the one from today. Now, obviously, as you can see, these are pretty impressive entries and we're catching decently sized moves. This is the P&L for my trade syncer that I copy trade all my accounts through. So all in all, the P&L adds up to around $37,928. Now, if we acute for the losses that we took, I took 2 losses this week. And whenever I trade this, I'm doing a flat 30 tick stop. As you can see, these are pretty tight stops. And for each one of those, I'm on around 11 accounts. So with 2 contracts that I'm normally trading, 30 ticks, and across 11 accounts, that is going to be approximately $6,600 in losses. So for the week, my final P&L is about $31,228. So if we get into the strategy actually broken down for you guys, the strategy is called the Power of 3. Some of you may have heard about it. Some of you may have not. Basically, a lot of people heard about the strategy. They don't know how to actually use it, and you don't know how actually simple it can be when you break it down the way I'm going to do it for you guys. So what the Power of 3 actually is accumulation, manipulation, and distribution. So as you guys can see, this is all the Power of 3 is. It's based on accumulation, manipulation, distribution, and these are known things about the market. It's how it moves. A lot of times when we have big moves that people like to catch trades on, it's normally on the distribution aspect of the market. But the Power of 3 is basically how the market moves on the higher time frames. We use the Power of 3 of the 4-hour candle, and as we know, during the New York AM session, we have the 10 a.m. candle, which is just around market open. So we use the 4-hour Power of 3 candle, and in this case, what I like to use is the 10 a.m. candle that opens during New York session. So there are 2 different powers of 3. So this is a bearish example of a power of 3, and this is a bullish example, which I will get into both. So if we look at this bearish example, this is the 4-hour time frame right here. Now, what we see is this candle right here is a very big and obviously bearish candle. This is a 4-hour candle that we saw. It opened, it high, and it made a low, and it closed. This is a Power of 3 bearish candle. Now, what this correlates to the strategy is that whenever you're looking at the higher time frames, obviously when you pay attention to every single candle, normally when a candle is bearish, it still has a top end wick, which means that when the candle opens, it normally manipulates higher before making the entire move down and making it an overall bearish candle. In the same way that a bullish candle on the 4-hour time frame, it normally has a top and bottom wick, which means that when it opens, it more than likely went down, manipulated lower, and then made the overall move, which made it a bullish candle and then closed. So what we're doing is we're analyzing the fact that every candle with the 4-hour candles have a top and bottom wick, which shows me that whenever we get a overall bearish or bullish candle, it's going to have a wick in the opposite directions, which means the candle opens and often moves in the opposite direction first before overall creating the narrative of the entire candle. So with this bearish candle, what we see is, and I'm going to draw it out an example for you guys. So whenever we see a 4-hour candle like this, you see the candle opens exactly right here. That is where the candle opened. So before the candle became bearish, first it opened, and then you see it has a top wick. It also moved up. So it opened, it moved up. Now, for it to become a bearish candle, obviously it has to make the overall move has to be bearish. So we are going to catch this move. This is the move that we want to catch, the move down on the overall bearish candle. And then you see the bottom wick that it has. It creates this bottom wick, and then it comes up and then it closes right there. So it has the top wick, which is right here, and the bottom wick, which is right here. Basically, what we need to know to be able to catch trades using this is, where exactly is this top wick? At what point is this candle going to flip bearish and start moving in the actual direction that it wants to before it manipulates? That is what the Power of 3 utilizes. You're trying to figure out and point out the direction of the candle and figure out where it's going to flip. In this case, we're trying to figure out, where is the top wick of this candle going to be? When it opens, it makes a high. We want to know where this is going to be before it goes down and lower. And then the move that we're trying to catch and trade is actually the top of the wick right here, and then to wherever it wants to go lower to distribute. That is the move that we're trying to catch and trade. So let me go ahead and show you guys the other example. So with this one, with the bullish candle, we see that this is a bullish candle, which means that it moved up in the general direction it wants to go, is up, right? but it also has a bottom wick. What we're trying to figure out for a bullish example is the candle opens right here. So I'm going to draw that out. Boom, the candle opened right here. And then it has a bottom wick. So it made an open, it made a low, and then it went high to make the overall candle bullish, and then it made that wick and then closed, right? What we're trying to figure out in a bullish example is where this point is on the actual chart. Where that point is how we're going to find out where the trades that we're going to take. And then whenever we're trading this is the move that we're trying to catch. This, when it makes the low of the candle to then wherever it wants to distribute to on the higher time frames, which would mean this is the move that we're trying to catch and trade. It's not the manipulation from the candle opening to where it wants to manipulate to, it's where it wants to distribute to, which is the power of 3, right? So to put it in more simple terms, the power of 3, whenever you're looking for it, in a bearish example, the candle will open, it will make a high, and then it will low and then close. That's why I have this written now. This is a bearish example. The bullish example, and this exact order is going to open, it's going to low, high, close. That's why I have it written out right here, right? So with this being said, all we have to figure out is where the candle is going to start flipping from. Where is going to be the top and bottom wick? For the bullish example, where's the bottom wick going to be? For the bearish example, where's the top wick going to be? That's what we're trying to figure out whenever we're trading the power of 3. So how to trade this step by step and how we're going to figure out those points in which it wants to flip is where this power of 3 comes in. So we're trading this, the 4-hour 10 a.m. candle opens, and we're looking for a higher time frame bias. That means that with this happening before, obviously we've seen that this bearish candle was inside of a bearish trend. This trend has been bearish on the higher time frames for quite some time now, and we've reacted off of bearish PD arrays, respected them multiple times. So the overall narrative of this would be bearish. So in that example, I would go into the day expecting us to manipulate higher before distributing lower, right? So that's the high time frame bias. In the same way that this has a respected right here, as you can see, we've respected a PD array consistently right here, and then this candle flips and turns bullish, right? So in this case, we have to find a higher time frame bias. In this case, this market is clearly bearish. So if we go to the market, let's say for this example that this is bearish. The 10 a.m. candle opens, the overall market has been bearish. If I'm bearish on the day, that means that I'm going to be waiting for the 4-hour candle to manipulate high before I take my trade to go low. So we're trying to look for where the liquidity is going to be swept on the higher time frames. If we go to the higher time frames, you see maybe there's some previous day lows, maybe there's some new wick opening gap, new day opening gap, whatever there's going to be, you're going to look for where we are going to go to either swip liquidity or what imbalances do we want to fill. That's what you're looking for in the higher time frames. Now, potential manipulation levels on where the candle is going to create the wick before flipping, we can look at the 1-hour or 15-minute PD arrays. A PD array can count as multiple things. It can be a breaker block, it can be a rejection block, it can be a fair value gap, it can be equilibrium, tons of different PD arrays. The point is you're trying to find a decent PD array on a mid to high time frame. So that means a 1-hour or 15-minute, that's where you're going to look for different PD arrays to then trade the 4-hour power of 3. So that is how you start to put your entrance together with your confluences. When you see a PD array get hit on the 1-hour or the 15-minute, that is when you're going to try to figure out your confluences. And so I'm going to give you guys the trade that I took today. Let's get into the actual charts. So as you can see, this is the trade that I took today. Now the way that I figured out this is the trade that I was going to take is when I looked at the 4-hour, what happened? When I go to the 4-hour candle, this is where it opened. So me knowing that the candle opens here, I'm looking for it to manipulate higher before going lower. And so which we did, we go to the 15-minute, which is one of the PD arrays that we were looking for. And what happens? We tap into this 15-minute PD array right here, which is a fair value gap. As soon as we tap into that fair value gap, there was clear reactions, and I ended up catching this. It was almost a top tick that I ended up catching, as you can see right here. We tap into that 15-minute gap, and as soon as we do that, we ended up selling off. Now, there's a bunch of different ways that you can get into this, but the point being, when you see the 4-hour candle open, you're seeing that the PD arrays that we're looking for are 15-minute and 1-hour. In this case, this was a 15-minute fair value gap that we ended up looking for to be able to hit this trade. Now, what ended up happening is we came up into this 15-minute PD array and we saw instant signs of rejection. And as well as this being part of a 1-hour gap, we have a 15-minute gap inside of a 1-hour gap, which was also inside of a 4-hour gap. And so with all these things being said, I'm looking for where are we most likely to reject? We're most likely to reject once we hit one of the higher PD arrays. The first presented fair value gap is this 15-minute right here. that's where I'm saying that we're most likely to end up rejecting from there. So we ended up finding our entry near that 15-minute. That was the first thing that we needed to see, which crosses off one of our steps. Now, one of our steps will look for potential manipulation levels, 1 hour or 15-minute PD arrays. And in this case, what we saw was the 15-minute PD array that we ended up using for this trade. So when I'm looking at this 4 hour, what do we see? So just like I drew out on the board for you guys, what we're seeing is a open, a high, and manipulation into that 15-minute gap right here. And then our trade goes from the high to that low, which this is the move that we're trying to catch. And then the candle closes. Obviously, the candle did some more action after that. But the point is, you're catching after the manipulation, you're catching the distribution lower, which is exactly where this trade came from. You catch the manipulation move from there, the 15-minute, and then you trade the distribution, which is that move right there. And that is a trade that we caught today using this exact same strategy. So obviously, the main mystery lies in now, how did I end up entering this trade? There's a bunch of different ways you can do this. I've been trading for almost 5 years now. I started trading when I was 13. So obviously, I'm going to have a bunch of different things that I've learned throughout the years that allow me to know when I do and do not want to get inside of the market. Now, with all this being said, I've also put in a completely free trading course for you guys. So when you're looking for the manipulation into the 1 hour or 15-minute, all you have to do after that is start to put together your entrance with your confluences. Now, there's a bunch of different ways that you can do this, and the way that you enter this is completely up to you and your entry model. But I'm going to give you one of mine for completely free. If you guys go into the link in the description, I have a free trading course for you guys where I give you guys a bunch of different confluences, teaching all those confluences, as well as a free strategy that you guys can use that I use almost every single week to be able to enter the market and make profit. I'm giving you guys that completely for free. Go check out the first link in the description. It's going to be a completely free trading course. There's no charges, no subscription, no nothing. You are literally just getting free information from me. So if you guys want to go check that out, link is in the description. Go get that. Now, that gives you a entry model that you can be able to use in accordance with this. And I showed you the trade today that I used using this exact same strategy. And as you can see, this is the beautiful trade that we ended up catching today, which made me a lot of my profit for the week. Now, I'm not saying if you guys start trading this, you're going to start making a lot of money like I am. But the point is, when you start learning this way, you can start to implement this. And then when you get more comfortable with it, executing it and taking it and using it as a part of your model. That is what my goal is for you guys to do. You guys can take what I'm teaching you, use it, even if it's for completely free on YouTube or part of the free course. You guys can start using this, utilize it, and put it into your own trading to be able to get your own models and do all that. My goal is to just help you and give you as much value as I can for completely free, which is the goal of this entire thing. So with that being said, that is the power of 3 and how I like to trade it. An example that I use from today, which made me a lot of my money from this week. If you guys enjoyed this video and you guys found this helpful, please hit the subscribe button. We're about to hit 10K subscribers on this channel, so make sure you guys go hit that sub button, hit that like button. Comment below if you learned anything or if you like kind of videos like this. I know I do vlogs, I do some educational stuff, but let me know what you guys want to see more of. I'll be happy to do it for you guys. With all that being said, I have my one-on-one mentorship opening up again here soon, so if you guys want to go check that out, we've been closed for a few months now. We've been getting all of our students results, and we are going to be opening that up again here soon. So go ahead and check my Instagram to see on updates on when that ends up happening. There's a lot of demand. I have to do a waitlist for that, so if you guys want to be first in line for the waitlist, keep yourself updated on my Instagram for when we end up dropping that again. Go check out my Twitter, go check out the Instagram, the free course, the second channel where I do my trade recaps. Everything is in the description, so make sure you go ahead and check that out. There's a lot of value there. I hope you guys enjoyed this video, and I'll be seeing you guys in the next one.